You should have your books open to 18.3. 18.3 is talking about capital stock. We have one learning objective. You need to be able to journalize transactions related to equity financing. So we have terms first. Equity financing means obtaining capital by issuing stock in a corporation. So really this is just getting our money through selling stock. Par value, we should be familiar with par value. That's the value that's assigned to a share of stock. So how much a share of stock is worth. And then issue date is the date on which a business issues a note, a bond, or a stock. So on February 25th, it says that we sold 10,000 shares of $10 par value common stock at par value. So that's going to be $100,000. We have receipt number 16. We're going to receive $100,000 in cash. So we're going to increase our cash with a debit. And then we're going to increase our capital stock common with a credit of $100,000. We need to make sure that we label that as common because we have a couple different types of capital stock. And I think that we'll see that coming up soon. So since we're receiving cash, that's going to go into our cash receipts. We're debiting cash. We are crediting capital stock common. Okay, now this one, we're issuing stock in excess of par value. So it says on August 4th, we sold 600 shares of $10 par value common stock at $40 per share for $24,000, receipt number 811. So what they're saying here is that the par value, the worth of those stocks are $10. However, we sold them at $40. So that's in excess of that par value. So we're receiving $24,000 in cash. So we're going to debit cash for $24,000. Our capital stock, though, we're going to credit for $6,000. So the reason that we do $6,000 is because we have 600 shares that we're doing at $10 par value. So 600 times 10 would be 6,000. That's how much the shares are worth. Then the remaining, because if we were just to do that, our debits and credits don't equal, the remaining amount is going to be credited to this paid in capital in excess of par common. So this is just saying that we are making more money than what the capital stock common was actually par value worth. So receiving cash, we're going to go into our cash receipts journal. We're going to debit cash for $24,000. We're going to credit our capital stock common for $6,000, and then our paid in capital in excess of par common for $18,000. So that's a long one, so they put that on 2 lines. Okay, so now we're looking at preferred stock. Preferred stock is a class of stock that gives preferred shareholders preference over common shareholders in dividends along with other rights. So it's like for our good customers, our good clients, we're going to set aside this preferred stock for them. Preferred stock is typically described by referring to the stock's dividend rate and par value. So on August 16th, we issued 400 shares of 6%, $50 par value preferred stock at par value $20,000, receipt number 815. We're receiving $20,000 in cash. So we're going to debit cash for $20,000, and we're going to credit our capital stock preferred for $20,000. Okay, again, we're receiving cash, so that's going to go into our cash receipts journal. We're debiting cash for $20,000, and we're crediting that capital stock preferred for $20,000. Okay, let's look through our audit your understanding. You should be looking for these answers as we go through them. Number 1, is a corporation required to issue dividends? And then explain your answer. So no, dividends do not have to be paid to stockholders unless the earnings are sufficient to warrant such payments. Number 2, how is preferred stock typically described? by the dividend rate and par value. Number 3, in what order is cash paid to preferred and common stockholders if a corporation is dissolved? So if that corporation ends, it closes, it dies, who gets paid first? So we're going to pay our preferred stockholders first and then common stockholders. Number 4, what is the most common reason that investors purchase preferred stock? To earn dividends. They want to make money. Okay, so that was the end of 18.3. Go ahead and do the 18.3 work together. There is a video that goes along with that as well.